All right, so what I'm going to do with this video is talk about China, the economy, where I think we're at, and why I think we're in a bottoming process for a multi-year bull run rally. So what we're looking at currently is the Hang Seng Index, and this is the monthly chart, okay? And even if you don't know anything about charting, the major thing to understand here is support and resistance, right? Support being where a condition is oversold or where there are buyers that step up, and then resistance is where there's sellers that emerge and it's a topping process, right? So what we're looking at here are these blue lines. And historically, if you look since 1990, which, 30 plus years, anytime we've touched this blue line, we found support, okay? And which has then sparked an uptrend that has lasted. This one was a year and a half, 2 years, right? This one was 4 to 5 years. And then this one was a lot of it's trading sideways, but there was a year to 2 years of just straight upwards momentum, right? So anytime you look to invest, right, you want to find confluence. You want to find something that's already proven itself. There's a lot of technicals out there, fibs retracement, support and resistance lines, supply and demand, all of these things, right? But there's so many of them that you don't really know which one to choose from. But the most effective way to choose one is one that's already proven itself. So in this case, what we have here is an ascending support line that's proven itself over the course of the last 35 years, one, two, three times, right? And if you want to count the back tests, which is this, that's a four and that's a five times, six times. So this, in my opinion, is a solid representation of a technical that you want to give validity to, right? It's proven itself. So this is where we're at right now. And where we're at right now is we've already hit it once, and then we've hit it twice, and we're starting to backtest. And this is the moment that I think matters the most, because if we look historically, right, um, you have a breakdown and backtest. Let's actually do the weekly chart. You have a breakdown, backtest, and then higher highs. And typically what has really given confidence that the bottom is in is when we break these descending resistances. As you can see, there's always a little bit of uncertainty, but then as soon as we get past this resistance, this descending line, there's large wide body candles. And that's what we're seeing here. If we come over here, it's the same thing. Now, given there's situations where we go and back test, and this one was about a year and a half of a back test, which is kind of what we're going through now, which is what I'll show you. So this one eventually we break through and it back tests and it makes it a little higher, but then it sputters and gives out. So then we have this new one, and this new one, in my opinion, had a little bit more validity than this one because it touched one, two, three, four, five, six times. So the more times it touches, when it actually breaks through, it gives more confidence that it's a true representation of a breakout. And that's what we experienced here. And then a solid uptrend. If we come over here, similar thing happened. Can go and delete this. But we had this descending resistance. And then as soon as we broke out, uptrend. Okay. Now this is where we're at now in 2024. We had a breakdown, okay, a reversal off of it, a very strong reversal, and it started doing really good, but then the Chinese economy started doing bad. So then we started selling off. And now we've been in a constant downtrend. And in my opinion, we have two lines that we really want to get past. There's this one, and then there's this one. This one right now, we're currently breaking or writing down the last few weeks. You know, and the inflation data came out Friday night, and it was actually beneficial. So what I think we're experiencing here is if we were to break out of this, let's try to estimate a timeline, right? So if we're going to do a timeline, and historically we've based around this blue line, let's say that this is the bottom. This is the most oversold we can get at this point. Well, if we go to the right to the most furthest out descending resistance, it looks like the timeline could be like all October, right? And that's like the most latest. But if we start to break out of this coming week or over the next few weeks, then that also has some power to just start an uptrend and break out up here. So it's really about if we break out of the first dotted descending resistance, it's like it gives us a little bit of confidence, but if we break out of this one, it would give us a lot of confidence. Now, this is the historical technical analysis of the HSI, right? We have 35 years of data proving this concept. So there's a concept here, there's a bullish thesis here. Okay, now let's look at it on a economical basis. Okay, so what we experienced here was a downtrend of CPI. China has been in a deflationary status since September of 2022, just constant downtrend. And what we've experienced here at the Friday close was finally going from deflationary to inflationary. It rose 0.7%. And if you were to draw a line down here, this is a descending resistance, and we have a breakout. Actually, there you go. So if we were to draw a descending resistance, we'd have a breakout here. And I really honestly feel that this is going to be a representation of what the Chinese stocks are going to look like over the next month, 2 months. So now let's cover the basis. We have the historical technical analysis showing a bullish thesis and a rounding bottom, right? We're really close to a bottom. Now, even if we're really close to a bottom, stocks can fluctuate 10 to 40 to 50% even from here. But now let's rationalize it with other factors. So we have the economy, and with the economy, we've had at the Friday's close, CPI show a bullish data point, which is inflationary. Now, a constant inflationary isn't going to be good, but we'll go with this for now as a baseline, as a curvature out of this, a bottoming out of deflationary status, which will initially be bullish, and I believe the market will front run that as a concept. Now, we also have to acknowledge that over the past 4 months, that um, China is coming out of a recession. And not only are they coming out of a recession, but the Chinese government has been stimulating the economy greatly in many factors, and they're working on other policies right now to continually stimulate the economy, right? So you have the government stepping in to also stimulate the economy and help grow the economy, which is kind of a sign that even though the governments usually typically move slow, but they are also supporting this support bottom, right? The government is also supporting this rounding, this bottoming of the Chinese economy. So we have an economical bottoming, the economy bottoming, combined with technical analysis saying we're bottoming. And this is on a macro view. So now let's look at something like Nio and Alibaba, things of that nature. So with Nio, that's an ugly downtrend, but we've consistently had issues with their earnings. They've been cash burn heavy. Pretty much every one of these has been red. They can't really do anything. And then this most recent one, they've actually reduced their cash burn flow drastically, which I believe is what also made this reversal indicator present. So what we're looking at here is this purple rectangle is a June 2020 gap, and it was filled this past week. Combine that with a capitulation volume candle, this large wide body volume candle that shows an increase in volume, right? A large lower body wick forming weekly hammer candle. This filled with a gap fill combined with, I don't even have it drawn, but we'll draw it really quick. All-time high descending resistance. And what we'll do is we'll actually make this purple so it's easier to see. So that's an all-time high descending resistance. Where did it bounce? In the purple, right? So that's one support line. Then we have this old SR, this old support resistance flip, which was respected once, twice, 3, 4, 5, 6, and this is 7 times it was respected. So you have to give validity where validity is due, right? This is a technical that's proven itself to be worthy, right? Both as resistance and as support. So that's 2 support lines. Then we have this all-time low well, not all-time low, but most recent low, pivot lows, support, descending support, which is the red line. And although it broke through this, it really only matters is if there was like the box of the candle closed below it. So since there was a wick, that also is a validity of support. Now, let's look at that. And then what we also want to look at is the ADL line. This is the accumulation distribution line. This was the recent or the all-time low of accumulation. And what we had was a breakdown and a rejection up to this point. So to me, that's bullish. It was a look below and fell. Now we need more data to prove itself with that, but if we also go to the daily one, then we can kind of see something here as well. And what we can see here is realistically, this is a whole accumulation phase. And if we were to start really printing below this area in the accumulation distribution line, I think that would be very concerning. But up to this point, you have to give validity where validity is due. And previously, when we broke above this, it found support here and it had an uptrend from March 2021 to June 2021. So, 14 months, 15 months, which resulted in quite a large uptrend, right? Then, what are we doing here? We also have one here that was a scary drop, but then it reversed kind of like the weekly chart and it looked below it and fell. Looked below, fell, and then broke out. And let's see what kind of move that this was on March 2022. March 2022 would be this one, and that is a 90% rally from that area. Something else to kind of know and give acknowledgement to is historically, Marches have been a bottom, and we're in March currently. So like this one was in March 2000, March 15th. Let's look at March over here, and it was like March 2nd, and there was an uptrend, pretty much a constant uptrend right there, to be honest. Let's look at that. So around March here, and we made a lower high, which was 33%, which then faked us out and went lower. But even though we made a lower low, the accumulation was kind of giving us a sign here that that was manipulation, right? So if we're here, we rally up, and even though we break down, we're finding an ascending support on the ADL line, and it kind of kept riding up. So even though we dropped down and this started rising, that's a bullish divergence, which then proved itself to be a bullish divergence as it ended up rallying from a low of $7 to a high of 16 for 130%, right? So I think there is a lot of validity here and a lot of confluence um, as far as China as a whole of a bottoming process through the technical factors, the economy, and now one of the major stocks. We can also do the same thing with BABA. If we look at BABA, I'm a big ADL fan, by the way. But if we're looking at BABA, if we look at this, we can see this rounding crescent. And if we look, typically, when you get a rounding crescent, it starts following the crescent. So when we have the crescent, when we've gotten through the base and we start having an uptrend of the crescent, the price action follows the crescent. And the last time we've had accumulation at this level, the price was $120 a share, right? Which is like an 80% rally from here. And we're getting really close to this edge. And I consider this like a timeline. So if we were to even go sideways, it's like by May, I think there's going to be a huge blast off of a rally. Um, so we look at that. And if we look actually at the technicals of this, what we have here is currently we start to have a inverse head and shoulders, right? We finally have, a descending resistance breakout, but there's a couple fells here, like one, two. We ended up breaking back down, but then we've recaptured it. And currently, if we were to hold this line, we're good. If we were to kind of extend it here, it's questionable, right? So next week will really tell us what's happening here, but I really think the inflation data is going to give us a directional move this week. Um, So if we are to break above this, I think the next real big idea after $78 a share would be 86 to 88. And that kind of breakout could be 16 to 18%. But if we were to look at the moving averages and we were to get above 88, or realistically, if we were able to get above the 200-day moving average, which is around 82, and we start basing over that, what that means is that's all medium-term time frames, moving averages, becoming support, which then creates a base, right? Something like this, where as soon as price actually starts getting over all the moving averages, there's a base, which then causes momentum, and then it typically will find support. It's been a long time since it really kind of got above the gold line and stayed above it. But historically, if we were to look like back here, breaks above, gets down, reclaims it, back tests it, shoots up. And when you have most of the moving averages under the price action, they start to support the price action, right? And then when you really start breaking under it after a long trend, then it starts becoming resistance, as you can see. And that's what we've experienced for the last 3 years. Um, so with that being said, let's look at Luckin. Luckin, my baby, has been struggling hard. It's been pretty obvious that it went through a full cycle. Um, and when it does that, it has to go through a correction. So what I see here is one of these. So that's five waves, and then either an ABC structure or a 5-wave structure. And this is what we really got to look at and pay attention to, because I think this really, the devil will be in the details. I think if we break this low come Monday or next week, this becomes a 5-wave structure, which would then support the thesis of an ABC correction, which would then ultimately be a massive head and shoulders. And as much as I hate this, this could really play out because the last 2 quarters of Luckin Coffee, their profit margins have contracted. The last one contracted by like 40%. And it's mainly because they're opening up thousands of stores. You know, they've doubled Starbucks China expansion. But, you know, you have to acknowledge that Starbucks isn't a new company, right? They slowed their expansion down because they had to manage risk. So there's many stories of companies growing too quickly, like MedMen, which at one point was one of the largest marijuana companies uh, in America, and they expanded too quick, weren't profitable. Um, you know, they were almost profitable, but then started becoming wildly unprofitable because they expanded too quick. And now they're not even a company anymore. They filed full bankruptcy. So that's a possibility, or at least a risk factor in Luckin Coffee. And the thing is about the stock market is they don't like risk. So if Luckin Coffee is going to create this probability of risk, then the market's going to price in that risk. So I think what could happen here is we could see a major rally, right? Now, if the price action already gives us that, then that's scary, because it's kind of like there are some analysts out there is already forecasting it, and they've moved big money to create this fifth wave. And if that fifth wave happens, then this is so likely to happen. It's very probable. Elliott wave theory is pretty accurate, especially in Luckin, because I've been using Elliott wave theory for Luckin for quite some time. But let's say we don't make a lower low next week. That would be extremely bullish for me, for us to see a higher high in the short term. Because what that would then mean is, instead of us having a 5-wave structure down, this could be a ABC structure, ABC C structure. And if that's the case, then we would have a wave 1, wave 2, wave 3, wave 4, wave 5. But essentially, this would be the beginning of wave 1 for wave 3 on the larger scale, which would be very exciting, right? Typically, wave 3, commonly, very basically, is a 1.61 a retrace extension of wave 1. And if that were to happen, wave 3 could essentially be about $62 a share, right? And if that's $62 a share, then let's do 50% retracement of this one for wave 4, which would be about there. And then we delete that. And then we would do a 161 extension for this, which would then put wave 3 at a finishing of around $75 a share. I don't know about you guys, but that would be very exciting. So, um, the biggest thing that I want to elaborate here is really what happens here. What happens here next week? Is that a wave one, a deep retraced wave one, or do we make a lower low um, and make that a five-wave structure? Unfortunately, since they did expand so quickly, I find it, as a common sense person, I find it really hard to believe that they could, you know, um, reverse those contracted profit margins in just one quarter. So if that was the case, and we do make a lower low here, I think it's more probable we do an ABC correction, we fill out that right shoulder, and I hate this with every ounce of my being, but ultimately we go test this all-time low ascending support and fibs extension, right, of um, this wave, sending us to about $9 to $10. So I know that this is a little messy. I probably should have turned these off a long time ago, but that's what I'm looking at as far as China as a whole. Um, and yeah, um, Luckin's my baby. Luckin's my main investment. I've been trading around it for a very long time. And yeah, so let me know what you guys think, and hopefully you don't flame me too bad. This is my first video ever, and I just did it off the cuff.